Quick start, cut costs. Cutting costs is the one guaranteed way of keeping more money in your bank account. Smart business owners will start with cost cutting when they need more revenue, and they will do everything in their power to cut costs at every available opportunity. To understand why this is so important, you must understand the difference between gross profit and net profit. Many businesses use their net profit figure to determine the profit impact of any revenue that we might help find them. That's a huge mistake. Net profit is determined after all costs are taken out. However, adding additional sales which do not require any added fixed costs such as rent, fixed salaries, utilities, etc., will increase profits by the gross profit margin. That's the revenue minus any direct costs of adding that revenue, such as sales commissions, costs to make and deliver the product or service, credit card fees, etc. The big takeaway here is this. When you follow the strategies in our program, the additional revenue you generate will count as gross profit, not net profit. But here's even better news. When you cut costs from your business, every cent goes straight to your bottom line. You keep 100% of all your cost savings. Unfortunately, many business owners don't think that there are viable ways to cut costs. But studies have shown that a significant number of businesses operating today are nowhere near maximizing their cost savings opportunities. There are several areas where costs can be cut: financing, suppliers, hours of operation, cash management, inventory, transportation, marketing, just to name a few. So let's discuss several areas where you can experience immediate cost savings. Start with your suppliers. Now, I do know that most of my audience are holistic practitioners. Suppliers in your case would be if you sell oils or supplements and things of that nature. So if you purchase any number of products on a weekly or monthly basis, contact your current suppliers and let them know that you're forced to cut your business's expenses and you're in the process of auditing your current purchases. Tell them you prefer to continue a long-term relationship with them, but you need a 20% price reduction in exchange for a long-term commitment. And would they consider what type of arrangement? Most will, if not, contact alternate vendors and offer them the same commitment. Due to highly competitive business environments these days, chances are excellent you'll be able to successfully renegotiate many, if not all, of your current vendor expenses. And depending on your business, don't overlook the expenses you incur for insurance, landscaping, janitorial, trash pickup, office supplies, maintenance and service repairs, even computing equipment. All of these are negotiable, and none of your current vendors want or can afford to lose your business. Consider the fact that the worst they can say is no. And when was the last time you audited your personal expenses? For example, your home, car, and life insurance policies. Insurance providers operate in a highly competitive, cutthroat environment. You can easily see a savings here of 20 to 30% annually. Same thing with your internet, cable TV, and cell phone providers. All of you haven't looked at these recently, definitely take a look. Depending on the size of your business, this one tactic could save you hundreds, if not thousands of dollars every month. Next, audit your business as well as yourself. Gather up all of your receipts, bank and credit card statements, both personal and business related, and go through them line item by line item or download them into an accounting software that will group the expenses together for you. What are you paying for that you no longer need or use? Do you pay dues or membership fees for the local chamber or other associations or groups but no longer attend these events? Then cancel them. Keep your emotions out of the decision-making process when doing this. You may belong to a local gym you really like, but the reality is you haven't worked out now for a year or more. Time to cancel and save that $70 per month. How many streaming services do you pay for monthly? Do you really use them enough to warrant the fee? How about magazine subscriptions, even if they're online? And speaking of credit cards, when was the last time you audited the fees? They're charging you every month. Are you paying 18% or more in interest? Call the credit card company and ask for a lower rate, or check out alternate providers. Or better yet, don't use credit cards at all. Most business accounts as well as personal accounts now come with a Visa or MasterCard debit card that works the same way as a credit card. Use that. Credit card services is a cutthroat area that you can easily exploit. You can often obtain a credit card these days interest-free for 12 to 18 months. Take advantage of this immediately and save all that interest. Are you aware that most of your everyday mundane tasks can now be easily outsourced, such as IT, accounting, bookkeeping, marketing, and so on? Consider outsourcing to contractors, we call them VA or virtual assistants, in the Philippines or South America. Contractors there are highly qualified and speak excellent English. They typically have a bachelor's degree, if not a master's degree, and will provide their services starting at a few $100s per month. We do go further into VA and hiring and outsourcing with virtual assistants in future sessions. If you're a small business owner doing all of these tasks yourself, chances are you experience frequent overwhelm and are severely overworked. This is your pathway to regaining your time and getting back your life. So now let's look at the loans you have outstanding. One client we worked with had seven separate loans totaling around $40,000. Each of those 7 loan payments averaged around $500 per month, or $3,500 in total. We recommended the client take out a consolidation loan and wound up with a single payment of $450 per month, a savings of over $3,000. Next, ask your accountant to look over the ways that you've structured your business. Most business owners set themselves up as a simple LLC, a limited liability corporation. Nothing wrong with that, except you may be losing thousands of dollars in possible tax savings. One of our clients offered professional services and was earning more than $200,000 per year. He restructured his business, and this allowed him to pay himself a salary of $30,000 a year, and the remaining $170,000 pass through his business as a dividend. He still has to pay federal income tax on the dividend, but not Social Security taxes. This saves him around $18,000 annually, year after year. So check with your accountant to see if this or other tactics might work for your business. If you have employees, ask them for their recommendations for cost savings. I guarantee you that they have several that they can offer for consideration. Perhaps offer them a percentage of the annual savings to spur their participation in innovation. But most, if you have actual employees, are more than willing to help. All of these tactics add up to substantial savings for your business. Let's say your business brings in $1 million in annual revenue and has a 20% net profit margin. That means that your total expenses equal $800,000. If you cut costs in just one area by $10,000, you've saved 1.25% on your expenses. You get that by dividing the potential savings by the total expense. However, that $10,000 represents an additional 5% of profit when compared to the current net profit of $200,000. And this is in addition to the increase in the value of your business, which easily doubles the impact. To make cost-cutting work in your business, your employees may have to be sold on the idea. That's because cost-cutting normally impacts your employees first. Take these steps to gain their cooperation from the start. As you go through the Quick Start program, I want you to consider the exponential growth you can experience by implementing several of these tactical steps simultaneously. So consider the following. Suppose you use bundling that we referenced in the increased pricing module, and experience just a 5% increase in annual revenue. Or better yet, if you don't sell a basic commodity, just raise your prices by 5%. Or set up 1 or 2 joint ventures using our joint venture module, or improve your marketing using our marketing and advertising secrets module. Additional options here include upselling, cross-selling, downselling, internet marketing, and reactivating former customers. Next, lower your cost of goods sold by 5%. By auditing your current supplier pricing and renegotiating a small reduction in your costs, you could also ask your employees for their cost savings suggestions. That would also produce this 5% savings. Although a minimum reduction of 10% is easily achieved in most cases, let's leave that figure at 5%. So we stay conservative in our estimates. Finally, cut your overhead by 5% by employing just 1 or 2 of the multitude of tactics we just mentioned for cost cutting. As you can see in this example, featuring a business making $1 million in annual revenue, just a 5% improvement in only these 3 areas would increase profits by 35%. Any business can easily do this with a minimal amount of time and effort. So get started today and enjoy immediate increase in profits. See you in the next session.